Good morning, good afternoon, good evening. Welcome to Martyn Lucas Investor. It's all about inflation now. Let's watch the stocks move. Let's check in on all the information that we have. So we've got seconds away now before we get inflation. Context. It's about to come in. We've got the audio coming through. We're listening in and we're watching closely. It's the next 30 seconds. That's why you can hear all the different audio feeds coming through. I'm checking on multiple sources. Let's see how it all pans out. So stand by. We're just seconds away now from the figures. We were at 0.3 on core, 0.3 on inflation year on year, and 0.3 on core. We were 3.3 on year, same as last report. Inflation report 0.2 expected and has been. Let's see what we do. So we've got seconds away. Next 15 seconds. Tap the like button. This is a very, very important inflation report today. The first one after the election. So let's go and see what happens. Click subscribe and ring the bell. Stand by. We're just seconds away now. Here we go. Listen in. Here it comes. Any moment now. We're looking for 0.3 or 0.2. 0.3, 3.3, 0.2. Okay, no change. Inflation year on year is 2.6. That was what was expected. CPI 3.15. It's exactly as expected. No decline, no increases, exactly as expected. You can see my portfolio has shot up on that news. We're looking at Rocket Labs as well today. It's a Rocket Lab special. We're looking at that. Let's see how it affects Coca-Cola, my defensive. Remember, uncertainty is when these stocks boom. Coca-Cola is just trimming down again. Nothing amazing there. That's perfect because I'm waiting for January the 1st to add some more. So there we go. Let's see how CNBC reports.
Welcome back to Swatch Box. Rick Santelli here live at CME HQ with October breaking CPI news. Headline: CPI expected up 0.2, delivers up 0.2, exactly as expected. Strip out inflation, up 0.3, exactly as expected. If you look at year over year, 2.6 as expected, but 0.2 hotter than the rear view mirror. 0.2 hotter than the rear view mirror. That is basically a very important issue to pay attention to, considering that this really has been, out of all the inflation metrics, following a linear path down pretty much every month this year. So we see that pop. If we look at year-over-year core, ex-food and energy, 3.3. And once again, it's exactly as we expected, like all this data was. And this one does equal the rear view mirror at 3.3. 3.3 is the highest since it was in May at 3.4. We've had 3.2 2 months in a row prior to this. So you could say it's a bit warmer. Now, if we look at the indexes, and I like to look at the indexes once again continue to move higher to all-time forever highs, whether it's the index headline or the index core. Now, I very rarely look at real average hourly earnings, but they are so lofty. On a year-over-year basis, 1.4, same as last month, but that's the best since June of 23. That's real hourly earnings.
Okay, we'll leave it right there. That's enough. Earnings. So we've got the core inflation 0.3 as expected, core inflation rate year on year 3.3 as expected, inflation rate 0.2 as expected, inflation rate year on year 2.6. We was expecting 2.6, but it was 2.4. What does all this mean? It means, generally speaking, we're moving in the same direction. It means we're not going to get big rate cuts going forward. Very slight. Remember, at 0.25, we are still at historic highs. We still have pressure on the economy with the rates as they are. But if we reduce faster, there's the danger of a Paul Volcker and going back up again. So we're not going to be reducing rates too quickly. We want to be holding them steady. But of course, we've got a change of government now. So we'll see what Donald Trump says about all of this. But it's as expected. The markets like it, relatively speaking. It's up. You can see defensive stocks like Coca-Cola, they trade on uncertainty. People move heavily into defensives. Pfizer, Coca-Cola, PepsiCo. For me, Coca-Cola is the best performer long term. So I'm buying as it keeps falling. It's up slightly today, but it fell on that news. No surprise, because people buy this when there's uncertainty, and they take profits from it when things are looking rosy in the garden, and everyone is buying the general market, which is what they're doing right now. The S&P is up all the time, so it's good for me, because remember, I'm always buying when people are selling. That's what I always do. I'm looking for the opportunities, not chasing the stocks, not buying what's going up now. I'm an investor, not a lemming chasing the market. I bought this 18 months ago, identifying a bull market. Now I'm starting to move into defensives as we start to trim out of the S&P going into next year. So there we go. A good report today, generally speaking, but some warning signs going forward. We just need to be aware of that. Things aren't all perfect, but we are moving in the right direction. I would continue doing what I'm doing. I'm not buying anything right now because I'm all in on margin. I've got $210,000, nearly $250,000 now invested. Month on, month out, I'm trimming down my my margin. When I get the big dips, I buy, like I bought a couple of weeks ago. I bought another 10 shares of VU, the S&P 500, and I was right to do so. But I've now sold my S&P on my Roth IRA, tax free, and I bought Coca-Cola, and it keeps going down, which is great. It's down now 5%, and I'm buying more of it on January the 1st when they increase the allocation. I will take $8,000 on margin from my Robinhood account, take it over to my Roth, get a 3% match, and then I will buy Coca-Cola again. Even if it's risen back to where I bought it, which is 5% higher, that's what I'll do, because you want to go into defensives next year, because the S&P will cool down. Simple as that. There's more to go in it, but there's much greater gains now in Coca-Cola in defensives, in my opinion. So that's how I'm playing it. That's the inflation numbers today. Click above my head for all the links down below in the description. Here's my full review, my full alpha playlist. I've done over 300 stocks now. Is it 200? 300? Over 200, let's say that. Over 200 stocks I've reviewed. Go and check them out. Down here, I'll put the Donald Trump playlist as well, which is the Donald Trump the Donald Trump trades. You might check out what I thought about those, and I will tell you I was right on every single one. 19 trades, 19 wins. Go and check out the full playlist. Until next time, as always, take care of yourselves and each other.